Hello and welcome to this weekend's market update. Today is 25th of March. So we're going to have a look at S&P 500, SPY, QQQ NDX. We'll look at what the current trend looks like, what the momentum indicators are telling us, what are some of the levels we should be looking at. We'll also look at the sectors and see what sectors are strong within S&P 500, which sectors are weak, and we'll also discuss some of the stocks we should be keeping an eye on. So let's get started. So you're looking at daily chart of S&P 500. S&P 500 finished the day up 0.56%. It was weak throughout the day, but towards the end it found some buying pressure, so managed to finish the day with a green candle. If I quickly look at the weekly chart, just to see, you can see that we have two green weekly candles. At the moment, it's right in the middle of this range that it's set. Since reaching a high of this level and this low, it's kind of in the middle of this range. And you can see that the weekly momentum is kind of neutral. RSI is right at the 50 level. MACD is just flat near the zero line. So overall, the weekly patterns are more neutral because you can see within this range, it's right in the middle. And the momentum indicators are also kind of neutral. So we're not getting too much of a clue what's happening, directional bias at this point. Now, if we switch to the daily chart also, what we see is that if I bring in the moving average, if you look at the structure is clearly down. You can see high, lower high, and this is potentially another lower high. Now, within this lower high context, you can start to see maybe some higher lows being formed. You can see a low right here, higher low right here. This could potentially be higher low. You can see it a little bit better if I show you the line chart. So right here you can see a series of lower highs being formed. Now, given where things are, it can play out in a couple of different ways. One possibility is that it does that. If it does that, what do we have? We have up, down, and then break, and then we have a break of this line. This is a bearish looking pattern. So if it does do that, if it pulls back, then that's basically is bearish. On the other hand, if it moves higher, let's say from here, and takes out this, all of a sudden this looks bullish because you've got series of higher lows, and the target would be this level right here. So it can go either way. So let's have a look at what the momentum indicators are telling us. So RSI is right at the 50 level. So RSI is basically saying, hey, I'm neutral. I don't have any directional bias at the moment. MACD is below the zero line, so this is negative. So overall, I would say it's kind of neutral. Even if I bring in the moving averages, if you look at the moving averages, look at all the moving averages. They're all jumbled up, at this location right here. So you've got the 200-day moving average, the black line, the green line is the daily 20 EMA, and the yellow one is the 50. They're not giving us any clue as to whether this is positive or negative. They're all kind of bunched up in one location. So the moving averages are not telling us anything. So what are some of the levels we should be looking out for? So let's look at some horizontal levels. So in terms of horizontal levels, if I just zoom out, you can see it clearly. So last week, it basically defined a couple of ranges. So it defined this on the upside and this on the downside. And guess what? We're right in the middle. Again, it's not providing any clue. So the way to look at it would be if we move above the midpoint, which is around, say, 39.80, then the objective would be to move to the top of this range, which is around 40.41. On the other hand, support is right around 39.10-ish because you can see there was a purchase right there. So if 39.10 gets breached, closed under, then obviously you're going to look at some of these lower levels around 3800. So keep an eye on this range. See whether or not it can take out 38 39.80. If so, then maybe the positive momentum carries forward, and we look for 40.41. If I look at SPY very quickly, just to see what those levels are. So on SPY, the levels are again. So on the upside, you want to look at 396. If 396 gets taken out, then the goal would be the top of the the high of this red candle, which is around 402. On the other hand, support is the bottom of this green candle right here, which is around 390. And then if that goes, then you're looking at right here, which is around 383. So those would be the levels to keep an eye on. Now, I want to take a deep dive at some of the sectors to see what the sectors are telling us. So let's have a look at this. So here what I have is we've got 11 sectors that make up S&P SPY ETF. So XLK and XLC, and then you've got healthcare, financials, discretionary, so forth and so on. And I also have their weights. So XLK, the information technology, that represents 26% of the ETF. So this is the heaviest weight. Communication is 8%, healthcare 14%, financials 13%, so forth and so on. Now I've broken them into two groups. These two based on the current trend. So at the moment, the current trend is up for technology and XLC, and we look at the charts. Together, they make up 34%. So 30% of the components are putting upward pressure in SPY and S&P 500, whereas the remaining 9 sectors, totaling 66%, they have a downward trend. They're underperforming S&P 500, so they're putting downward pressure. So you can see the majority of the sectors are putting downward pressure, and that's why you see the overall trend is kind of down. Since this is SPY we're looking at, since reaching a high of this level, which is around 418 in early February, you can clearly see that it's been making series of lower highs, and that's because the majority of the sectors are down. 66% of the components have a downward bias. Each of these sectors are actually basically underperforming the broader market, underperforming S&P 500. Whereas these are the two sectors they're outperforming. They total 34%. So they're negating some of the weakness from these other other sectors, but they can't entirely offset the the decline. So that's why we see a slight bias to the downside. But if these two sectors weren't holding up well, then S&P 500 and SPY ETF would be down considerably more. Now, so that's basically what the current situation is. Going forward, I do see some opportunities for some bounce within this sector. I've got a couple of sectors which to me seems interesting. The healthcare and the staples. Between them, it represents about 20% of SPY ETF. So I think that these two are a strong rebound candidate. So if these two are able to rebound, I think they're going to put some upside pressure on SPY and S&P 500. And we'll look at the chart just to see why I think so. And then with respect to the other ones, because they have fallen quite a bit, I would basically say that they are possible bounce candidate from oversold. I'm only saying that because there are enough technical damage has been done. So I'm not basically saying that. So I think the bounce could be somewhat limited. But with respect to these two sectors where I think the bounce could last for a little bit longer. But with like financials, they've fallen quite a bit. So, yes, there could be some, short-term bounce to release some oversold condition. So if you look at energy is down quite a bit. So and we'll look at the chart. So, there is room for some bounce, but energy makes up 5%. So if any of these sectors, even if they have an oversold bounce that can provide upsides, that would provide upward pressure on S&P 500. So let's start off, these two sectors which are strong. Why I'm calling them that they're in uptrend. So let's look at the sectors right now and see what we can learn from the sectors. So if I look at XLK first, so this is XLK. So you can clearly see that XLK is moving higher. The moving averages are moving higher. Both the daily 20 and 50 are above the 200-day. If you look at the weekly chart, you can clearly see that weekly chart, it made a weekly higher high. On a monthly basis, you can clearly see that it looks like it's forming a bullish looking candle. I mean, we still have 1 week left, and if it's able to close above this weekly 20 EMA, look at how many months it struggled to close above the monthly 20 EMA. So if it's able to do that, combine then with improved momentum, look at RSI. So XLK is looking strong to me both on a weekly, daily, monthly basis. Some consolidation cannot be ruled out because it is overbought, but this is looking strong. Next one is XLC communication. So within XLK, you've got stocks like Apple, you've got Microsoft, you've got Google. All of those are looking very, very strong. XLC. So why is XLC looking strong? Well, you've got Meta in here. You've got Facebook in here, Google in here. So they're doing very well. Look at the moving averages. It's moving higher. So it's making series of higher lows. If you look at the weekly chart, even on a weekly basis, you can see the momentum indicators are moving higher. MACD is crossing above the zero line. RSI is above the 50 level. So these two are definitely in an uptrend, and they've been putting upward pressure on S&P 500 and SPY. Then I talked about two rebound candidates which I happen to like. So let's go through them now. First up is XLK. So XLK, you can see that it's been on a strong downtrend. You can see that the moving averages have been moving lower, but now it looks like it wants to move higher. If you look at it, each time it touched the moving averages, it pulled back and formed a lower low. Even here, it bounced up, it then fell, it formed a new low. But this time, it rebounded from here, it didn't form a lower low. And it looks, on Friday, it closed up 1.39%. If you look at the momentum indicators, RSI is gradually moving higher. It hasn't crossed above the 50 level. You can see since falling below the 50 level here, how the 50 level has acted as a resistance. So if RSI is able to get back above 50 level, I think this could be, the momentum will shift from negative to positive. So there could be, we could see, healthcare sector moving up. So let's look at some of the let's look at some of the levels we should be paying attention to. So if you look at the levels, so just zoom out right here, you can clearly see that this is an important level. We got some rejection right here. So this is around 128. If it's able to take out this 128 level, then next level will be here and eventually this level. So I'm beginning to, so this consolidation is looking, looks positive to me because it hasn't established a higher low. So I like what I see in healthcare. Now within healthcare, if this is the sector that's going to rebound, these are the stocks that look good to me. Amgen, ISRG, Lilly, United Healthcare. So let's quickly have a look at some of those stocks. So I said, I said Amgen. So here's Amgen. So if you look at Amgen, you can see that it's been consolidating. This is a resistance zone. If it's take out this level, I think Amgen can move higher. If you look at ISRG, So, again, you can see that since forming this low, it's been gradually moving higher. So momentum indicators are also positive. You can see that MACD is moving higher, RSI is moving higher. So this stock looks good. And then you've got Lilly. So let's bring up Lilly. Eli Lilly is another stock that I think is looking strong. So you can clearly see it's been moving higher. MACD is moving higher, so I would watch this one. Then ABBV, this is another one which is looking better because you can see it made a new swing high. United Healthcare is another one that I would watch. You can see RSI is trying to get back above the 50 level. So those would be the stocks I would be looking at within the XLF sector. The next one I said is XLP. So XLP is staples. So this is XLP. XLP, they make up 7%. So this is XLP. You can see XLP is trying to get through this area of resistance. If it gets through this, I think this can start to gradually move higher, and this is going to put upward pressure. So between these two, they represent about 20% of SPY ETFs. So if they move higher, then I would, they would definitely put, and if these two can hold up, then these other two join them. So then what happens is, instead of 34% with an upward bias, then you're going to have more like 55% with an upward bias, and then this becomes 45%. But if some of these other sectors also kind of bounce because they're oversold, so let's quickly have a look at some of those levels. So let's look at financials. I mean, this obviously doesn't look good, but because of the fact that it has fallen quite a bit, you can't rule out some kind of an oversold bounce. Next would be let's say building materials. So this one also has fallen down. You might say this is a bear flag consolidation. Okay, fine, but this is an area I would watch out. 78. If it's able to close above 78, then this invalidates the bear flag consolidation. So this is then going to put upward pressure. Because if I see stochastic and RSI, they're in oversold territory. If I look at industrials, again, they also had a they also came under pressure, consolidating. The level to look out for is this one, around 99. Stochastic is overbought, RSI is oversold territory. So if they also move up from an oversold territory, they're going to put upward pressure on SPY and S&P 500. Utilities, I mean, they've been on a downward path. Utilities were up 3.12%. So from an oversold level, they got a bounce. You see there's a support right here. Resistance is right there. So if it's able to get back up to this level, that would also put upward pressure on S&P 500. Energy, you can clearly see that on a strong downtrend, consolidating, support right here. If it's able to find some buying pressure, I would look for this area. This would be the resistance around 81. If it's able to get back above 81, then obviously that also is going to put upward pressure on S&P 500 and SPY ETF. This is real estate, XLRE. You can clearly see that it's been moving lower, very oversold. So there was a strong bounce, 2.5%. So if this also continues, it rebounds. The level I would watch is this level right around 36. If it takes out 36, next target would be around 37.5. So any upward pressure is going to put, any move to the upside is going to put upward pressure on S&P 500 and SPY ETF. So when I look at these sectors, I do see that while they are definitely in a downtrend, within the context of the downtrend, there is an opportunity for some bounce. If that happens, then I definitely think that maybe S&P 500 and SPY can basically also rebound next week. Just before I finish, within consumer staples, the stocks I'm watching right now are these three: PG, Procter and Gamble, Coke, and Walmart. So let's quickly have a look at them just to see why I'm watching them. So this is PG, this is Procter and Gamble. So you can clearly see that it broke out of this range, and then it has now achieved full measure move. It's now trying to get through this level. If it gets through this level, I would target around 150, 150. You can see the momentum indicators are looking strong for Procter and Gamble. If you look at Coke, KO, so the level to watch is this one. You can see that it's spending quite a bit of time in this zone, and on Friday it closed just underneath this level. So if it's able to take out, say, 61, then it's going to break out of this range. I can see that the momentum indicators are improving. RSI has gone above the 50 level. So I'm watching KO. Then there is Walmart. So watch Walmart. I'm watching this level right here, which is around 142. If it can take out 142 convincingly, then I think that it can move towards the top of this channel, which is around 147.50. You can see that momentum indicators are improving. So Pepsi is another one that I'm watching. I need to see it move above 180. Costco is another one to keep an eye on. So if it can clear this level around 497-ish, so I like the consumer staple sector at the moment. I think there is opportunities, and these highlighted ones are worth keeping an eye on. So just to summarize, although the trend is down, I see that there is room for a bounce. If that's the case, then I would not be looking on the short side on SPY. I would be looking for maybe this rebound to continue for a little bit. I'm not saying that it's gonna move up. Maybe it can move up to, this is S&P 500. Maybe it can move up to around 40-41 level, especially if these other sectors can see some bounce. So that's basically how I see S&P 500 and SPY ETF. So let's look at NASDAQ and QQQ just to see what I'm seeing. So NASDAQ definitely has been very strong. There's no question about it. Momentum indicators are strong. So what are the levels to watch? So look at this red candle. The high of this red candle is the resistance, which is around 12,924-ish. So I would watch that level. If that level gets taken out, then that would be bullish. Support would be the bottom of this red candle, which is around 11,550. So those would be the two levels I would watch out. So for QQQ, the relevant levels numbers are 315 on the upside, and then 306 on the downside. So those would be the levels I would be watching. Now, if you look at the sector breakdown for QQQ, which is different from SPY, you can see technology makes up 50% of QQQ and communication makes up 16%. That means between these two sectors, it is about 65-66%, whereas these two only made up 34%. Communication and technology only made up 34%. Whereas in QQQ, these two sectors, which are strong, they make up over 66%, and that's why QQQ is doing so much better. And look at financials; it's only 1.2%. But if you look at financials, which has been under huge pressure, that they make up 13% of SPY. So that's why you see that within QQQ, financials have a very, very small weight, and all these other underperforming sectors, they play a smaller role in QQQ, and that's why QQQ has been holding up better. So the levels to watch for QQQ, as I said, are these two. Let's look at IWM. I mean, I want to look at IWM, but let's look at IWM from the index point of view. If you look at this index, this is Russell 2000. It's been, under huge pressure, but look at the consolidation that's taking place right now. So you can clearly see that there is buy demand around 1700. You can clearly see you might say there's a double bottom right here, and then you can see sell pressure at the top of the range, which is around 1800. So 1700 is on the downside, 1800. You can clearly see double bottom. Oversold. So can we see a bounce? Absolutely. Maybe it can move up towards the top of this range and challenge 1800 again. So if you look at IWM, you can clearly see that it managed to actually close high after trading lower throughout the day. It managed to finish with almost a percentage gain. Oversold, so I could easily see some kind of a bounce. Now, if you look at the sector breakdown, so this is the IWM sector breakdown, you can see that majority of the sectors are the ones which are currently in downtrend. Industrials, financial, 16%, healthcare, 16%. Look at information technology, which is the strongest sector, only makes up 12.5%. If you look at this chart where I'm saying, up is a very small portion in IWN. Down basically is almost 85%. So if you look at, energy is down 6.5%, discretionary 11.5%. So with the exception of technology and communication, look at the communication, it's just a tiny bit, 2.74. So 2.74 plus, that's just 15%. Which means that 85% of IWM sectors they have negative momentum at the moment, and that's why we're seeing this kind of performance. But they are oversold, and I can easily see some kind of a bounce. All right, let's just move on to the other areas. Gold, let's look at gold. Very strong, but I could easily see some consolidation pullback in gold because it has had a big run up. You can see that it's way above the moving average. You can see that it's way above the moving averages. So I can see it slowing down and pulling back. So the levels to watch would be, first of all, this level, 1976. If it closes below this level, the next level would be around 1340. You can see that RSI is making a lower high. So I think there's some weakness building it. But on a weekly and monthly basis, the technical picture is strong. You can see we have an indecision candle this week, but I definitely think that within the context of the uptrend, there is room for some pullback, which means that dollar, which is quite oversold, could see a bit of a bounce. I'm not saying that dollar is gonna rally, but within this downtrend, I could see some rebound. So the level to watch would be this level, 103.50. So that would be the first area of resistance. If it's able to get through this level, then these areas 104.8, 105 would be the next level to watch. So I could see some rebound because they are kind of oversold. If you look at if I look at the yields, the 2-year bond yields, they're continuing to move lower. So this is around 3.7%. I mean, market is definitely looking for rate cut. If you look at the futures market, so this is the April is at 4 point, which is basically where we are. If you look at let's see, this is October is at 4.28. So basically, and the Fed funds rate is at 5%. So basically by October, market is currently expecting 75 basis point cut. This is September. September is at 442. So market is expecting at least a 50 basis point cut. So the market definitely is still expecting rate cuts going forward, then rate increases. Moving on to oil. Oil, still looks weak to me. You can see that it traded inside this range and broke to the downside. It's getting price acceptance. So I wouldn't be thinking of long at the moment because I see oil is quite weak. VIX, VIX is again, it's looking kind of weak at the moment. You can see RSI is right at the 50 level. If RSI falls below, then I would expect VIX to kind of move lower. So if it moves lower, the next level to watch would be around 20. Which is basically where the bottom of these two candles are, and finally to this level, which is 18, and the resistance would be to this level around 25. So that's the market update for this week. I thank you very much for watching the video. If you like the content, please consider subscribing, sharing. I hope to see you again in a future video. Thank you very much.